In this video, I'm going to share 4 popular questions we have been getting about how you should position your 401k, IRA, overall investment portfolio during the 2020 elections. The most popular question we've been getting is, what will happen to the stock market after the November elections? Will it go up or down if Trump or Biden wins? And a lot of people are going to say it's going to go this and that based on whatever that is. But to be honest, no one really knows. If we look at the stock market performance since the 1930s, since the Great Depression, here in this graph, I cannot see any noticeable difference in stock market performance under a Democratic or Republican president. The only thing really I can notice here is the stock market just keeps on going up with a few bumps along the way. The next typical question we get is, which sector will likely outperform after the November elections? Will healthcare stocks go up or down if Joe Biden wins? Let me know in the comment section which sector you think will outperform. But here's the thing, the economy is so complex that it's so hard to predict what the effect of a Biden or Trump presidency will have on each sector. And many really have gotten it wrong, even though it made sense from the beginning. For example, when Obama won, many analysts thought that alternative energy stocks would outperform, but clearly that didn't happen. And if you look at the studies or evidence, there's really no evidence that have showed that sector rotation or picking the right sectors have resulted in better performance in a specific investment portfolio. The most famous study out there on what influences investment performance is the one that was done by Fama and French, where their study revealed that value stocks outperform growth stocks. But even then, if you follow this study, you would have gotten it wrong again because growth stocks have been trouncing value stocks for the past 10 years. Okay, so if we can't really predict what's going to happen to the stock market after the elections, and it's really hard to know which sector will outperform, what about just betting on higher volatility? A lot of people believe that it's going to be a highly contested election, and as a result, the stock market will continue to gyrate over the next couple of months. And it is now possible because of innovation to bet on volatility. There's an ETF for that. But if you look closely at the popular volatility index, VIX, it's historically averaged for the past 5 years at around 11. And now it's already trading double that, around 26. So looks like that expectation of higher stock market volatility is already priced in. Okay, Alvin, so how should we approach investing then during 2020 elections? I would say stick to the core foundation of investing. Invest in line with your risk tolerance, diversify across US, international, and emerging markets. Make sure you're investing in the right investment vehicles that will lower your tax burden over time. And either you educate yourself on investing or work with a credentialed investment advisor. If you enjoyed watching this video and if you'd like to align your values with your 401k and IRA portfolio, make sure to check out our video on fossil fuel-free investing.